All right, welcome everybody to today's Wednesday workshop, PTG Educational Series. Today is October 11th, 2017, and the topic is PTG, the CCI crossover method, premium and discount review. Now this will be module 22 in our series, educational series. All right, so industry regulations require that I highlight NFA Compliance Rule 2-29C1 disclaimer. Simply states that hypothetical performance results have inherent limitations, some of which you will see today on the performance report, and there's no representation that any account will or likely achieve the results or losses similar to what is shown a little bit later on in the performance report. Trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. And as we all know, past performance is not necessarily indicative of future results. Okay? So, that said, let's get into some of the guidelines here. All right, for the CCI crossover premium and discounts. Now, I've taken a couple slides from the original workshop that we did about 11 months ago. I think it was November 2016, if my memory serves me correctly. And some slides are from that particular presentation. All right, and it's really important to understand the concept of how we view what a discount is, what a premium is, what it actually represents, and then we'll be able to put it in context to when we see it on the chart, and then what's happening. All right, so I'll just kind of brush through these. I'm not going to spend too much time on them. You can certainly take snapshots of these slides, and you can put them on your desktop and so forth, but it'll be recorded. So by definition, looking for long setups. All right, so a long setup for us is what we call a discount buy. All right, and so by definition, discount is weakness by definition, and we'll see that on the oscillator, on the CCI oscillator. But what we want to do is we want to buy weakness. We want to buy that weakness. We want to buy it though in larger developing strength. All right, it's really important. Simply on the short side, which is we call premium setups or premium sell. All right. By definition, premium is strength, and we want to sell that strength, but in a developing larger degree weakness. And we'll be able to describe what I mean by larger degree strength and weakness when it comes to trade selection. Okay. Now those are the type of trade setups we're looking for. So obviously, the converse will be the ones we want to avoid. So because discounts by definition is weakness, all right, we do not want to buy a discount in developing weakness. Okay, so a discount plus larger degree weakness, right, equals no long. As a matter of fact, we have a workshop discussing advanced premium and discounts. And if you haven't had a chance to watch that one, I forget which module it is. That is one where we actually use a discount to actually sell, all right, to short. But that's going to be a little bit beyond today's explanation and discussion for this point. And of course, the other portion we want to avoid is selling strength in developing strength, right? We don't want to short into buying. So premium plus larger degree strength equals no short. So on the converse of that could be a buying opportunity, all right? But in the basic definition and how this is all set up for us, we're trend traders. We're looking for the beginning and developing and existing trends. We want to buy pullbacks within the context of those trends, and we want to buy that weakness, but as the trend is developing strength, as it continues to display strength, and so forth. Okay, so that's the kind of the differences We want to look to buy pullbacks, i.e. discounts in developing strength and vice versa for premiums. Okay, so that's the core of it. Okay, so on the next slide, let me just show you here briefly. This will be one where there is a potential new emerging trend. Okay, and we won't get into too many details here. We're just going to brush through this. I want to get really to the charts, but it's important that you understand at least somewhat how the CCI operates. The CCI is the Commodity Channel Trading Index, where it's against a very sensitive oscillator, and we're looking for readings when it gets plus or minus 100. Okay, and then sometimes in other cases when it reaches extremes, all right, that'll be in most cases plus or minus 200. There are then opportunities for the market has basically statistically reached an overbought or oversold. I simply call that extreme conditions. I don't particularly like to use the term overbought and oversold, but that's a conventional term that most people understand, so we'll go with that. So the idea is when prices have reached above or below certain price points, okay, the price will signal, and we'll get a developing trend condition. And once it reaches those signals, we'll have an idea of how we want to handle that. All right. In terms of what you see here on the chart, all right, you'll see this yellow arrow, and you'll see this little star. That star represents a discount, or excuse me, an extreme, and it's by a discount. Now the discounts are going to have arrows that are pointing to the alert bar. When you see the arrows on the charts, they're simply a visual to point to the alert bar. Okay, and the alert bar is the actual bar from which the discount is taking place. Now this example here where you see the yellow arrow, these are discounts in weakening conditions. Okay, so as we just stated, discounts plus larger degree weakening conditions equals no long trade. Okay, now they are discounts, but again, by definition, discounts is weakness. Now if this was occurring, these discounts were occurring in developing strengthening conditions, we would consider them very aggressively. Okay, and we'll see those when we get to the charts. But in this slide, those discounts are actually in weakening conditions. Right, and then so the trend actually shifts. The larger degree trend shifts with the oscillator here, the CCI histogram. Okay, you'll see where it goes, crosses the zero line, and that indicates now we have a larger degree sell or trend down condition. At this point, we're looking to sell bounces or premiums, so we're looking to sell temporary strength in developing weakness, and that's where we get the premium here, where it's displayed at 2171, where it was when we did this slide. Okay, so in this condition here, we have weakening conditions, discounts to avoid, and then we have a new trend condition, premiums to consider. All right, so that's the core of what we're looking at. Now, there will be instances where prices will be kind of range bound. All right, where prices, there is no real trend condition, and prices are just bouncing back and forth. All right, now the beauty of the CCI indicator itself is we can use them in a trending condition or in a non-trending condition. All right, we're not going to focus today on the non-trending condition. I just wanted to show you that in a range type non-trend condition, the CCI, a premium or a discount, is still defined in the same way, plus or minus the 100 level on the CCI, but and if it gets to an extreme condition, plus or minus 200, all right, always better. We will get to the discussion of the magenta dots shortly, Matthew. Bear with me, all right, and we'll go over the spreadsheet. All right, so I wanted to make sure everybody has a little bit of background on the CCI itself. Okay, now near and dear to some of our members, such as Chuck. He loves divergences, and CCI indicator is excellent on identifying divergences at turning points. When those occur, you can simply use those divergences as well, all right, to help enter into a trade. Okay. All right. What's the next slide here? What do we have? Okay. So on the next slide, we're going to just take a quick look at a discount. We're going to take a much closer look at on the charts, the live charts. All right. But in this particular case, again, I'm not going to go into the formula here. We can just pass by the formula. All right. That is discussed in detail on the prior workshop we did. But you'll notice in this particular graphic, the trend condition is up. We have the fair value zone, which is the green shaded zone, up, and we have the larger degree trend condition identified by the histogram, all right, in a bullish position. Okay, so everything here is in a bullish condition. We're looking to buy weakness, temporary weakness, all right, you should be seeing the slide that says CCI crossover discount. Okay, that's the one you should be seeing. Yes or no? Okay, some of you are not seeing a slide. Okay, give me 1 second. Let me pause here. Okay, so now everybody has the proper slide up, which is the discount. So, as it shows, we're in an uptrend condition. So again, we're looking to buy temporary weakness in the context of an uptrend. Now what we're looking for is when the price has reached, as we describe it, a discount position, and as how we measure it on our CCI, it will pivot. Price action will then stop going down. It will pivot. If all the conditions are valid and verified within the context of the algorithm, okay, that generates the signal, right? There are a number of different filters, and we'll review some of the filters shortly when we discuss the performance report. But for now, just understand that the very best signals, and what I mean by best is that they qualify for all the filters. Okay, all the filters are true. There will be times where there will be a valid discount or premium, but there won't be a magenta dot associated with it. And again, those are going to be, we'll discuss a little bit that in a minute. But the best ones come in terms of qualifies and verifies. You will receive a magenta dot as it shows on the screen. Okay? All right? Again, there will be, once you have this signal, you can strongly consider taking the trade. Now, as with any other method, not every one of these signals is going to play out perfectly. All right? Context is going to be extremely, extremely important. All right? And context is vitally important for anything. But the context that the best signals come from is when there's a trending component to price. All right, very simple, straightforward, should not be much of a surprise. That's where everybody makes their money, is when there's a trend in effect. All right, sideways markets, in choppy, some people make money in there, but a lot of people avoid sideways action simply because they prefer to trade in a more trend condition. So the ideal situation in this particular method is when we have a trend type condition. Okay, so just bear that in mind. In terms of placing your stops, again, below the low bars, etc. All right, let's go to the next slide. Okay, in the next slide you should see the premium. Just let me know if you do not see it for those that entered. All right, so now in this particular case, again, what you'll see here is up in the top right, top left portion of the slide of the rather the graphic. All right, you'll see some discounts, but they have magenta dots. All right, so what that means is there was validity at that point, all right, to those discounts. The issue with those discounts is that they're in weakening conditions, okay? And so those discounts, even though they had magenta dots, which means that all the conditions at that instant where that bar is met the criteria and qualified, it was in a weakening condition. So nothing, this whole method is not, black box mechanical. All right, so you need to understand under what conditions. These are discounts in weakening conditions. We want to avoid buying discounts in weakening conditions because we know by definition discount is weakness. Now, some of our members, like Barbara, she loves these conditions because she likes to take the advanced discount or premium, which is effectively a short sell, all right, against those particular signals. Okay? Now, we won't get into that today. The idea, though, is when the trend shifts, okay, when the trend shifts, we're looking to now sell a bounce, in this case a premium, right, where the price, where the actual software gives us a signal, all right? And again, these are displayed in real time, all right, actively, and they will display all the parameters, right? I don't have all the entry parameters and target parameters on this slide, but they will show them. Now, for purposes of what we're trying to understand here is, what does it mean when there's a magenta dot? Is under what conditions should we be considering taking a trade or not taking a trade? And we'll go over those a little bit more detail. But this is the core, all right, of what we're looking for in ideal situations. Now we know, and there's been plenty of ideal situations over the years. With the low volatility recently, it's much more difficult and challenging to find, any intraday trending moves, to play out, but they will return. And so I'm assured of that. It's just a matter of, waiting and being patient for that time. But this is also a good time to make sure that we review and understand this stuff, all right, for our members and for those that are interested in our guests. All right, and then lastly, we were talking about the middle of the market. Now, you've heard me over and over and over again say when the price is in the middle around the volume trend, the midpoint, all right, I don't care and I want to avoid. There will be times where the market will, the price action will show us a premium or a discount with a magenta dot in the middle when the market is going sideways. All right, that is a time where even though the market, the price action is showing us a qualified setup that met all the criteria, all right, because this is not a black box type system. If it was, it would probably execute it, all right, without thinking about it, and it would probably get stopped out. So when price is in the middle, trading back and forth, and we all know what that looks like, when we get a CCI signal, all right, or a premium discount signal in the middle, those are ones that I'm basically primarily going to avoid, okay? Simply because occasionally one or two may work, but I'd rather miss those occasional ones because most of the time when we're in the middle, they don't play out that well, all right? So that's the last kind of, and that's kind of an important conceptual, market context thing that's important to understand. All right. So give me 1 second. We'll switch to that's the end of our slideshow, and we'll get to the charts here. Okay. So everybody should be seeing now. This is it doesn't really matter what contract this is. This just happens to be crude oil. But it really doesn't matter which contract we're dealing with. The concepts here are going to be clearly the same. and we'll discuss, what this is about. So having a little bit of background of, which trades are, in trend conditions, non-trend conditions, ones that have magenta dots, and you'll see here some of them do not have magenta dots. Okay, and this is where we'll start our discussion. Okay. By the way, by way of reference as well, you'll see two size different arrows. Okay, you'll see blue arrows and yellow arrows that are small. Those represent turbo discounter premiums. And then you'll also see a larger fat white arrow. That is referred to as our standard premium and discounts. Now, in terms of when we, years back when we began this, everything was under the standard settings. We've since adjusted those over the years, and to pick up a number of, especially when we're on an intraday time period, we can pick up a number of valid premium and discounts, but they're just faster. In other words, they're a little bit more frequent, and they're a little bit shallower than a normal, what we would consider a normal standard premium discount. And so we simply just refer to those as turbos. Primarily, that's going to be where we focus our attention most of the time. But again, keeping in mind that turbo discounts and premiums, we're looking for them to have a momentum type component, right? Trending up, buyers, now in a contract such as crude oil, we have quite a bit of momentum in this particular contract, right? S&P, on the other hand, it's like a lead sled, right? Doesn't have that type of trending component most times. So know your instrument. All right, crude oil is a very good contract to use in this particular method pretty much every day. All right, it doesn't trend every day, but it has a very good trending component. Some of the currencies, at least historically, have trended very well, and it lends itself, very well intraday periods, for this. All right, so let's focus primarily again initially on at first the ones with the magenta dots. Okay, so the ones with the magenta dots here. All right, let's. All right, so that's going to be this one and this one. Okay. What that means is all the criteria that the algorithm seeks to identify was true. Okay, so this would be, and in each of these cases, these would be ones that we would want to definitely consider taking. All right, and by the way, I'm going to go right into kind of the tick count report and the spreadsheet and so forth. These are the ones that will typically receive priority on getting to the spreadsheet. Okay, on the performance report. And I know Matt had asked about this. All right, but this is kind of a question I've gotten many times over the years, is that I see the performance, the trades that get listed into the spreadsheet. How come this one didn't and that one did? Okay, and so that's where this is kind of where the discussion will start here officially today on getting an understanding of of which ones get there or not, and then we'll discuss aspects of other setups that don't have magenta dots, and are those ones that we can consider. Okay. All right. So first thing is, anything that has a magenta dot is considered to qualify for the spreadsheet because of the nature of the setup itself, meaning that it has qualified and all the conditions that I've asked the computer to show me. All right. Now, by the way, just to regress here for a quick second, I don't know if anybody here, many of you have done some of your own testing and development, others may not. In the development process of any method, any system, there's a give and take, there's a balance that we're trying to get the best results, and any time you filter anything, all right, it doesn't matter when you have very loose criteria, okay, what will happen is you'll get a lot of results, and they may look very, very good on the surface, but as you start examining them, they're not all that great. And then you start saying, okay, I like what I see, but now I want to add some qualified conditions. All right, I only want to, in our case, I want to buy a discount in an uptrending condition, so that's a condition. So we start adding conditions, okay, to the criteria and the filtration basically of the data. And as we do that in stages, it eliminates a lot of false positives. All right, and so as we kind of go through that process as a developer, we're trying to find a balance somewhere where the results are adequate enough. All right, they may not be the highest, but they're not the lowest either. So they're somewhere in between where they're adequate enough, where and they're consistent enough, okay, then to start considering. Okay, so what I've done over the years here, I've gotten to the point where the filters in the criteria that I've chosen are pretty consistent, and I'm very pleased with what I have. It's not perfect, all right, but it's perfect enough where it allows me to make a qualified decision, all right, on the fly of whether or not I want to take a trade. Okay, I know it's a discount, I know it's a pullback within the context of an uptrend, and when all the conditions are valid, and it's just a matter of then I know what those conditions are, boom, I want to buy it, and I don't have to think twice about it, and it just becomes a matter of execution, management, and management of risk, and then letting the market do its thing. If you have to think wow, should I or shouldn't I, you don't quite know enough about the tool or the indicator yet, and that's where again why we conduct these workshops. All right. So in terms of what makes it to the performance report, anything that has, well, most everything that has a magenta dot will qualify for consideration to get to the spreadsheet. Okay. Now there will be instances where there will be a magenta dot, but it doesn't get to the spreadsheet. And this is a discretionary system, so I do take some liberty in qualifying the context. All right, so basically how I kind of run through this is I look at a signal and I said, is it the proper context, or are we at the high or low of a range? All right, and if the proper context is there, then the next kind of question I ask myself, would everybody have an equal opportunity to have executed that? Right? And if that answer comes back yes, then it makes it to the performance report. Win or lose. All right? I don't cherry pick the winners. All right? It's just I take everyone independently. Would either of these setups that you're seeing here, would they have qualified? Yes. Would everybody would have had an equal opportunity to take that trade? Yes, and they would more likely have reached the to the spreadsheet. Okay. There will be cases where, as I mentioned a little bit earlier, where we're kind of in the middle, choppiness, and yes, there will be a premium discount that has a magenta dot that qualifies in and of itself mathematically, right, for the algorithm, but contextually, it's just not right. And it's not something that I would go after, let alone I would expect anybody in the membership to go after as well. All right, so just as you have an understanding, all right, of what makes it to the performance report, what doesn't, you'll see like, okay, how come this one over here that doesn't have a magenta dot, or how come this one over here that doesn't have a magenta dot? How come those didn't? Okay, well again, they didn't make it to the performance report. Number one, because they don't have a magenta dot. All right, and what I'm trying to do with the performance report, by the way, all right, is record those setups that have the very best criteria. Okay, and the ones that have the very best criteria are going to be the ones with the magenta dot, right? Because all the filters are true. There will be instances, though, that there'll be a very good discount or a premium that simply does not have all the criteria that's true, i.e. no magenta dot, but there's still very good setups. All right. So what I want to get across to everybody here is that even though a discount or a premium does not have a magenta dot, it's not an automatic disqualifier. Okay, because the reason why it's more likely doesn't have a magenta dot is simply that one of the filters, all right, didn't make it to the true category. All right, and all the other filters may have been true, but it only takes one to disqualify it. Okay, so you can see why when you take a look at the performance report, there are many winners there versus losers. Now, there are plenty that got stopped out, but the majority of those are clearly winners, and it's in one way by design. All right, so the ones here that have magenta dots will have more likely have, made it to that particular spreadsheet. Okay, now the other ones here that we're going to look at here over to the left. Okay, let me just clear the dots here for a second. So you'll have a few here, okay, that don't have magenta dots. They're clearly discounts. All right. Most likely the reason that these didn't have magenta dots is this was a little bit more of a sideways pattern rather than a clear uptrend. So the trend condition criteria that we use was more likely false at that moment. Okay, but in the overall context, all right, remember that context is important here. So the context is we have a main uptrend condition here. Okay, this green line is what we call the main trend. So, and we also have an ATR, an average true range structure line. So these discounts, all right, you can see here on the oscillator, they did qualify, all right, and the trend condition here is still green. Green and blue indicate bullish trend condition. The green is slightly less bullish, but still bullish. So the trend basically kind of took a pause right here, but the price pretty much held, in this ATR zone, okay, ATR support zone. So for our members that are looking to buy discount, these definitely would be ones to consider. Now, you would need to do it manually. You'd need to, follow the right side pivot rule, right, technique. But clearly, these are qualified trade setups that members, those that are implementing the methodology would definitely consider. Okay, don't pass these by because they don't have a magenta dot. Okay, you'll potentially miss out on some very, very good trades. All right. That said, these will not make it to the performance report. All right. And in one way, we're not we're doing. Okay. Have a good evening, Storm. We'll see you tomorrow. All right. Storm's out in Europe. It's pretty late for him. So these discounts will never make it to the performance report, and in many senses they probably should, but the way I wanted to construct the performance report was only to show the best that have all the criteria. Okay, so in one way we're kind of doing ourselves somewhat of a disservice at times, but I think it's a disservice that is acceptable in that when we look at the performance report, because here's the thing, in the decision process, my expectation would be that most everybody that's employing the methodology would consider this discount primary of consideration to take the trade, again, in a developing uptrend or an existing uptrend condition, right, over, these over here, okay? Now, again, I would expect members to look for the ones and be more aggressive and active on the ones that have magenta dots, all right? In terms of the ones that don't, it becomes a discretionary decision process. So what I'm trying to get across to everybody here is that even though it doesn't have a magenta dot, many times they will be very, again, do we still have an uptrend condition? Yes. Are they discounts in weakening conditions? Yes or no? You're going to have to decide, all right, you're going to have to decide, whether or not that condition is true or not, all right? And again, that is, probably a full-length discussion in and of itself. But for the most part, the main trend here is still up. In this particular case, Manfred, on the 250 tick on the CL, we're using a 233 EMA, okay, on this one. That will change from contract to, instrument to instrument, okay, but in this particular case, we're using a 233, all right? All right, so there'll be instances where, you kind of have a bullish condition, ATR, no magenta dot. These can clearly be taken, all right, as longs. Just manage it accordingly, all right? Use your right side pivot rule, as our members are aware of, and same thing for this one, all right? But just understand they won't make it to the performance report, okay? So the ones that have the magenta more likely will, all right? All right, so as we move kind of along here, all right, so that's conditions where you have some that did qualify, some that didn't fully qualify, but you would still consider taking them, all right? Now, as the market kind of transitions from a bullish phase to potentially bearish phase here, all right, there will be, instances here where, now, one of the qualifiers, by the way, okay, one of the qualifiers is that for discounts, which are pullbacks within the context of an uptrend, the ATR must be a bullish ATR. Okay, that's one of the filters. All right, so in other words, the system will never generate a signal, a magented dotted signal. It will never generate a signal if on a discount we have a bearish ATR above us. Impossible. Will never happen. On the same time, on the flip side, if we have a bullish ATR and we have a premium signal, which is, they do happen, but they're not commonplace, right? Actually, you have one right here as we're speaking about it. This one right here. This one's a premium, but if you notice the bullish ATR line, the white ATR line, right? So this one here would have never qualified. It is a premium, but it never qualified, all right? And it would never qualify because it has a bullish ATR line, all right? So that's just, as you know, you need to have the proper context. So what I've tried to do in all cases is put the best context available that we can mathematically define and identify to keep us on the correct side of the market when considering these trades, okay? And again, the positive historical results that are shown on the performance report are, again, created by design, not cherry-picked, but created by design of what I wanted to show, okay? Now, as we transition, I'm going to show you something here, all right? Now, the trend has shifted here, right? Everybody should should have identified here. We have a red histogram, okay? Now the price is trading below a descending main trend line, and we have a bearish ATR, okay? Now, if you notice here, you'll have three, look at this, you have 1, 2, 3 premiums, all right? All very good premiums. None of them have a magenta dot. How come? Don't we have a downtrend line? Okay, so the reason for that, right, is that one of the filters, all right, is false. Okay, now if you're just looking for the ones to take the trade that have the magenta dot, you're basically going to miss some very good potential trades here, right? You clearly have a downtrend, you clearly have an ATR that's on the correct side, and we clearly have a bounce with, you know, a bounce in price, right, that pivots, and the downtrend continued. So, as I said earlier, we want to consider those that, even though they don't have a magenta dot, okay, to take those as trades. All right, consider those. Now, part of the reason why we have magenta dots is on our auto trade assistant. Okay, we have an ATA, auto trade assistant, top left. All right, and the auto trade assistant is, again, an automated execution, so we're looking for the very best setups for the ATA, and that is the qualifier for an execution that any ATA trade must have a magenta signal. If it doesn't, the ATA will not take it. Okay? But that said, not every trade you're going to be doing using the Auto Trade Assistant, and nor should you be. The Auto Trade Assistant is just that. It's an assistant. It is not a black box. If you were to turn the ATA on and just let it run, all right, you're probably going to be disappointed in the end. So context, as I've mentioned over and over again, you know, is very important. But let me just adjust the setting here for the filter, and you will see in just a moment, magically, each one of those signals will have a magenta dot. Give it 1 second. See the magenta dot now? Okay, so I have just adjusted the filter, okay, that initially disqualified the signal. Now it's qualified. All right, this is what I was talking about. It's very, very sensitive at times where, you know, if you're only looking for trade setups that have magenta dot, it's the EMA filter, all right, within the context of the settings. All right, so if you turn off the EMA filter, it will generate more signals. All right, so you as a discretionary trader and a user of our method and our signals have the ability, okay, to turn on and off the filters. Okay, so that's partly what I want to discuss here. So if you go into, and the filters, by the way, are located under the Auto Trade Assistant. Okay, now it doesn't matter whether you have the Auto Trade Assistant enabled, the filters are located in there. So you'll see a filter called Enabled MA Filter. Okay, and when it was turned on, or yes, meaning that it has to qualify, all right, it disqualified because it didn't meet the qualification of the EMA. Okay, when we disabled the EMA filter in this particular case, all right, what happens is you get the magenta dots. All right, so it's going to be up to you, All right. Now, if you're somebody that wants to see all the signals and you're willing to be a little bit less, I can't explain the details of the filter. It's an EMA filter, an exponential moving average filter. Okay. All right. At this point, it's beyond the scope of this particular filter. Okay. So the idea simply is to have all the restrictive filters, everything is turned on. There are times where it'll be missed. In other words, the signals won't have a magenta dot. Okay. Now, again, for those of you that are concerned about the performance report, which many of you are, well, these signals that with the EMA filter turned on were disqualified and never made it to the performance report. Okay. Now, had I not done that, all right, they would have made it to the performance report. So what I don't do is I don't say, oh, I'm going to turn this off and I'm going to put it to the performance report because that's going to make my performance for the system look that much better. I don't do that. Okay, I can honestly tell you I don't do that. It's not part of what we do here. All right. If I change any criteria on the performance report, I will let everybody know and it will be identified as such. But for the time being, all the filters are turned on, all right, to the most restrictive, and in that instance, these particular trade setups would not make it to the performance report. But the key takeaway here is not so much the performance report, is that I want you to identify the fact that we have a downtrend condition. It is a clear premium. It generates a signal live. It tells you 5077, 5069, 5061. It gives you the price. Okay? Now, all you need to do is employ, perhaps manually, the proper entry technique to get in on these. All right? It's up to you. I don't sit here in the membership room, the trading room, and call out every signal. The system that generates that for us, as well as we have what we call our Scanalyzer dashboard that does that. Okay, it generates all the signals. All right, this is all built into the software. Gives you an audible and visual alert. All right, so I want to make sure that everybody understands, particularly our members, that even though you may not have a signal that has a magenta dot, okay, if it's in the proper context, all right, that you want to be able to take that. Okay. All right. So again, here's another one where the price. Now here's what will happen is, take this one for instance right over here. Okay. Now we got a premium, but it's actually in strengthening conditions. There is a magenta dot there, but it never triggers. The price has to trade and close through the magenta dotted line level, okay, to pivot. We need to have a confirmed pivot. That will be the trigger. If there's no confirmed pivot, okay, then there's no trade. Okay, you'll see over here on the next one, okay, that it did trigger. Actually, let's see, it didn't trigger till this bar here. Okay, it didn't trigger till that bar there because we did not get a close. It penetrated it, but we didn't get a close at or below the level where the magenta dot was. So the trigger would have come over here a little bit later. But again, as you can see, still worked fine. Same thing over here. All right, came down, triggered through. Now, now here, this will be a case where this one right here, all right, triggered, but it more than likely did not get to the target. All right, I'm just kind of eyeballing it. I don't think it got to the target. All right, and then it came back up and then traded above the high. So that one would have gotten stopped out. Stops happen, all right, and But here's the thing when it comes to that. The trades that you want to be really focusing on, okay, are the early ones in the early shift. So for instance, when you have a an ATR that's shifted, okay, all right, and the trend is still in effect, but now went from a bearish ATR to a temporarily a bullish ATR, then shifted back to a bear. That's the time where when you get a signal, that's the one that you want to take. That's the one that you want to take. Later on, as the move progresses, okay, there may be another signal, but the context now is going to be vitally important, because this signal down here, though it may be a valid premium short sell, it may be very close to a target zone, okay? And when prices are near target zones such as that, the context is not the best, all right? This still may make it to the performance report, and that's where I said I do employ some discretion, all right? But I do stick very strict to the rules of whether or not everybody would have had an equal opportunity to have taken that trade. Everybody has an equal opportunity to take a trade such as that. All right, yes, the first signal following a shift, okay? That's the one I want everybody to concentrate on. Those are the ones that are going to put more money in your pocket, potentially, than late signals. And you can see like this cluster of signals here, okay, this one triggered, these did not trigger, but the context was incorrect. All right, why was the context incorrect on this one? Because price had reached a low, all right, and it was actually in a slightly strengthening condition. All right, so again, they were valid in and of themselves, but the context was not right. All right, so if one in here triggered, I probably would not put it to the yeah. And there were also, you can see how the prices are strengthening well above the ATR as well. Okay, so the best signals stay well below the ATR. That's a good point, Barbara. All right, so some of the best signals, premium or discount, does not really retrace all the way back to the ATR. When they do, that's actually an indication of counter strength to the original signal. All right, so this would be an instance where I would not be taking, I would not put it to the performance report. Okay, so I know Matt had some questions, about that. Okay, he had sent me an email. Hopefully, some of this discussion, Matt, answered some of those questions. I know specific to some of my comments, specific to some of your questions, I kind of tailored some of my commentary to those questions that you had sent me regarding what made it to the report, what didn't. So most everything that has magenta dot should. There will be instances where it didn't, and they're legitimate signals, but they just simply wouldn't have made it to the report. All right. Okay, so I think that's where I want to conclude kind of my viewpoint of what signals that you should be considering, those that shouldn't. Bear in mind, for those that have the software, all right, if you want to go into the Auto Trade Assistant, okay, and under those settings, it's the EMA. That's the one that you want to primarily, you can turn on and off. Okay, the other ones I prefer like we have the ATR filter. All right, as I stated earlier, on a case of a bullish ATR, you want to have a discount in the proper context. All right, so all those should be remaining. All right, but if you can play around with turning the EMA filter on and off, and you'll notice that when you do that, some signals will actually disappear. All right, so you saw one over here that just disappeared. Actually, that's that was one right here. So this was one that had a magenta dot. just a moment ago. Now that I turn the EMA filter back on, it's gone. Why is that the case? Because it's actually a premium in strengthening conditions. So with the filter on, okay, it would automatically disqualify it. Okay. Now the other ones that we spoke of just a few minutes ago on to the left here. Now, again, sometimes the filter can kind of squeeze out a good signal, and so it'll be up to the individual trader to decide of how they want to implement using the EMA filter. All right, that is one where if you want to stay very, very strict, keep it on. If you want to loosen the criteria a touch and you're willing to accept, a little extra wiggle room, okay, disable it, and you can then kind of selectively choose which ones you want, which ones you don't. All right, again, it's up to you, but as long as you're armed, and you're knowledgeable about what happens when you turn it on and turn it off, then you can make perhaps more informed decisions, and that's what we want you to do. All right, so being more informed and understanding how these things work is clearly what we want you to do. Now, for those that again, but if you decide you want to keep it very strict, all right, well, these signals here that don't have dots, okay, are clearly viable signals to take. But you must be, paying attention and looking for them and, considering them. And again, just use right side pivot rule. You don't have to try. We're not trying to get the highest or lowest tick. We're trying to get it, of course, when price, pivots. All right, when it pivots back down, all right, and the sellers come back in, you want to trade it at the pivot point, and that's where your entry is going to be. And then you'll be able to then calculate what your stop would be, and then again, these would all come manually now because they won't automatically display, all right, via like an auto trader, but you'll still be able to understand what to do and how to do it. All right. We have a little time left. Does anybody have questions? That's pretty much like the core stuff that I wanted to get across to everybody. Whether which ones made it to the report, which one didn't, and which ones you should certainly consider. Remember, stay looking for the setup. All right, the premium or discount, the first or second. Okay, those are going to be the best two. All right. This one had a third one. Clearly, the trend here in the crude oil was strong to the downside. Yes, we had another third one, but it's as Chuck wrote here, in the box. All right, the first and second premium or discount following a shift, all right, are going to be the best. All right, they have the highest probability of success, and simply because either the existing trend has temporarily stopped and then it's re-emerging, or the entire situation is prices have reached an exhaustion point and then everything is fully reversing on a larger scale. So in either case, if the main trend, what the main trend direction is, as you can see here, this direction trend kind of shifted, all right, somewhat gradually, but enough where there was enough buyers trying to push it back up where they didn't have any success, created a nice early short condition after a trend shift. All right, this is where you're going to excel, all right, at this stuff. Now again, in the S&P, we haven't had the recent activity in the S&P has been poor, to say the least. But you should consider looking at these, whether it's in the NQ, whether it's in, if you're trading a European, Euro. I know some of you guys are trading Euro and a couple others. This works for gold. I don't trade gold, but this will work for gold. I just don't trade it. It's not something I focus on. But certainly crude oil is a very popular, and I know a lot of people shy away from crude because of the the quickness and craziness of it. But if you're just looking for the same setup, forget about that it's crude oil. All right, look for those same structural setups, and you need to build confidence, and the way to build confidence by way is going back, certainly reviewing the videos and prior workshops, and get a deeper understanding of each component. But practice. All right, I cannot tell you how much practice. Barbara is a teacher. She knows exactly. Okay, yes, 250 ticks in crude oil. She knows exactly the benefit of practice. Okay, if you don't practice, you're not going to learn properly. And Sierra Chart has a fantastic replay feature. Okay, utilize it. Utilize it. All right. I know the other platforms, Ninja. I don't think TradeStation has a replay feature. I think that they're pretty behind the times on that. But I certainly know Sierra Chart has a fantastic one. It's easy to use. Right. You can step through the process. It's just it's just as easy as just flipping a switch. Okay. But practice this stuff. Watch the vids, get to know the construction of these premium and discounts, all right, like you know your own name. And when you start seeing these develop, all right, you'll gain greater confidence. I'm sure of it. I'm absolutely sure of it. Okay. Same thing, with other aspects of of the methodology. Okay. For our guests that have been visiting with us, we're giving you a little inside glimpse of the education that we provide for our members, the deep discussion, the insights that hopefully I'm providing for everybody. They're not little tricks or anything, but they are definitely, insights to what to be looking for. But I will tell you, if you do want to take the time, or if you have the desire to take a little bit of time to learn and study, okay, you will excel at this stuff. Okay, you will excel, guaranteed. All right, can't guarantee your profit, but I can guarantee you're going to learn and excel at this the more you institute it. All right, okay. All right, so that's going to officially end the discussion. I will get to that, Sam. I will officially end the discussion here on this particular workshop. We're at about an hour and 3 minutes. Okay, and if does anybody have any questions related to this specifically? I mean, we'll leave a few minutes if you have questions. Otherwise, if I've answered many of your questions through the presentation, then we can leave it at that. All right. Okay, so no real questions right there. That's fine. Hopefully I've answered your questions during the presentation that you may have had already. All right, and hopefully I've answered some of Matt's questions in there as well. A lot of it had to pertain to the spreadsheet, performance spreadsheet. All right, okay, so let me finish off the presentation here officially by saying, if you have any additional information, would like to speak with me, members or guests, you can reach out to me. Best way to reach me is my email address, david@polaris-trading-group.com. All right, so this officially concludes this workshop on the CCI Premium Discount Review, and I'll answer some off the record questions about a few other topics here in just a moment. So let me just complete the recording, and we'll get to those in a second. Thanks, everybody.